The way to think about this is, just like you said, it's gone from worth very little to worth a lot more. There's been many bull and bear cycles over that time period, really 4 of them that you could count. And it's a volatile asset, right? But if you look at the underlying fundamentals, the strength of the computing network, et cetera, all of those things are hitting near all-time highs or all-time highs. So it's very encouraging. I think in terms of a store of value, it's still up over doubled this year, right? And so you're going to get this asset that can run 2, 3, 4x, and then it'll pull back a little bit, and then it'll run again. And when you have a store of value with artificial supply cap, you need increased demand for that price to continue to move upwards.
So that if we've talked stock to flow before, people love that. Anyone that
follows you pulled the chart up.
Yeah, I did. Now that chart, which we don't need to go into how it works, but stock to flow is how you can evaluate scarce assets like gold or silver or like wheat. You can replace the entire amount of wheat you have every year. Whereas gold, it would take 62 years to replace that current production to replace what you have right now. So even with stock to flow, when it got up to 11 or 12,000, the actual chart, which is, I think it's a logarithmic chart, is it not? But 8,300 is where it is right now, right? So this is not far from what a stock to flow model would put the value.
There's a whole bunch of ways to measure value versus the price, right? So the value, there's the Mayer multiple, there's the stock to flow, there's these Metcalf law charts, et cetera. And most of those charts are saying that we're right about where we should be, right, to your point. And so the price will go above and below what that value is.
So what causes this, in your view, what causes when it goes up? What caused the sell-off in the last week, in your view?
Yeah, again, I think that well, first of all, when the price drops, there's more sellers than buyers, right? And
is that simple?
Well, that's definitely one of the things.
Yeah.
The other piece of this is, when you do have these futures expiration, there's this backwardation where the futures price point is lower than the spot price. And so historically, about 75% of the time, right before CME pays out, there's been a drop in price. So I do think that has some short-term effect. But over the long term, I think that the futures are less impactful as some of the other fundamental measurements.
You say it's a store of value. I'm not going to get into an argument with you over that. I will say to you, though, we will reach a point where the U.S. dollar will become digital. Other global currencies will be digital. How then could Bitcoin be a store of value?
Yeah, look, if I'm the United States government sitting it from a rational seat, I think that they should tokenize the dollar immediately, right? If you look at China, they're tokenizing their currency. There's other countries that will follow. What's going to happen is there's not going to be a competition between digital and non-digital currencies. Every currency will be digital. What we're going to have is a competition of monetary policy. And if all of a sudden, let's say China has a digital yuan and we don't have a digital currency, it will be much more accessible for people to buy the Chinese yuan in other parts of the world than the U.S. dollar. And so you might see higher levels of adoption of the Chinese yuan than the U.S. dollar. So we can tokenize or digitize the dollar fast and drive that adoption globally. We've got a chance to keep that as the global reserve currency.
But now, to Joe's point, why would you own Bitcoin if you could own the U.S. dollar?
I ultimately believe that people are going to opt for something that is not manipulatable, is not seizable, is not censorable.
Not debasable.
Not debasable, et cetera. And so I think people are going to continue slow at first, but over time, more and more people will choose a currency that a government does not control.